we're looking at the Central Bank of Nigeria having set the MPC dates for February. We're keeping our fingers crossed, but of course there are so many considerations. We have to discuss this with us. The Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rewane. Mr. Rewane, good morning and thank you so much for your time this morning.
Good morning and thank you for having me.
Okay, so Mr. Rewane, we asked for MPC, and last year Mr. Kadeso had told us the CBN Act allows them to hold at least 4 MPC meetings, and that was fulfilled for 2023. This is 2024. We're beginning with February. I know that before the dates were made known, we did get some jitters from investors, issues of uncertainty, the rates have just been there and all of that. Does this announcement make any difference?
Surely does. First of all, let us correct something. The Monetary Policy Committee is an independent committee which is made up of people from the central bank and outsiders. And they meet every 2 months to reflect on what the monetary policy is and make decisions which will affect the monetary policy in the economy, i.e. interest rates, money supply, and inflation. Now, I respectfully disagree with the governor when he says the minimum number of times they have to meet is 4. The minimum number of times is not the maximum number of times. Since July, when we met, when the committee met last, and now, which is 7 months, the inflation has increased by almost 5 to 6%. It's almost 30%. So in time like this, you have to meet more often. As a matter of fact, you bust all the frontiers and meet more often to address the issues. So now that there's going to be a meeting in February, I think that they will have to do the right thing. The first thing is that they will have to address what is causing inflation. Inflation is caused by so many factors: money supply, the price of diesel, exchange rate pass-through. All of these things have to be addressed, while at the same time ensuring that you complement the fiscal policy of the country to ensure that there's macroeconomic stability. I think that's the main cause. The expectations are that we are going to see about anything at least 150 basis points to 200 basis points this time. But the consensus, according to Bloomberg, is that for the year of 2024, we are going to see interest rates increase by about 300 to 400%, in this period. That is what Bloomberg is saying. And after talking to all the economists, but having said that, you must understand that the increasing the MPR itself is not enough. There must be the effective interest rates in the economy must increase, 1, to rein in money supply, and 2, to stabilize the naira. You talked a minute ago about NNPC talking about using short-term loans and facilities from African Bank to stabilize the naira. In all due respect, that's not going to solve the problem of the naira at this point. The naira is still under pressure and it's trading at 1,350 naira per dollar, which is the lowest point it has got to in many, many years. It's a record low.
Yeah, so before we even talk about some of those expectations, what about the committee of the MPC? Because I believe the individuals that make up the committee also determines the result of the meeting, because these people will come with their experience and their perspectives, and I believe Mr. Kadeso is not working with the former committee. So what should or who should make up a committee that would be able to look at the right direction and make the right decision for forward movement from the MPC?
The Monetary Policy Committee is appointed by the president, the governor, and some other recommendations. They draw them from the academia, from business, people with business experience and all of that. And they are confirmed by the Senate. I'm not aware that the Monetary Policy Committee that was last approved by the Senate, who have a term of 2 years, have been dissolved. So it will be news to Nigeria to hear that the Monetary Policy Committee has been dissolved without going through a process. So I suspect that we will still be using the old committee. And if there's going to be a change in the committee, what time would you have, 1, to appoint them, to get the Senate to confirm them, and for them to meet before February 26th? The time is too short. That looks like something that is an afterthought. So let us expect for now, until we are told otherwise, that the Monetary Policy Committee, has approved by the Senate, will remain and do their job. It's an independent committee, and their input is very necessary for macroeconomic stability.
So now that the governor has said that the central bank will be working with inflation target, what difference does it make to conversations around the MPC and, of course, the results they come out with?
Inflation targeting is a framework. That's what we call the monetary policy framework. And then you anchor expectations using the what we call the nominal anchor, which is the MPR. And that also pulls along with it other interest rates in the economy. So you look at money supply aggregates, which is an intermediate anchor. You look at inflation itself and broken down into core, food, and other inflation. Then you look at the factors that are stoking inflation. And then you look at all of this. Then you look at growth, and look at unemployment and all, so that basically the monetary policy of the country actually is used to correct either when you have loose monetary conditions or when you have excess liquidity and what we call money supply saturation. What has happened in the past 7 or 8 months, and even before that, is that we've seen money supply increase at about almost 39%, while growth is only about 2 or 3%. So ab initio, you have about 36% inflation factor. On top of that, we've seen the price of diesel, which is a major stocking factor. The price of diesel had gone up to over 1,100, 1,200. It's now trading today at about $1,000 naira per liter. We've seen the exchange rate pass through because the naira has dropped sharply from in June, when it was trading at about 800 naira in the parallel market. It's now at about 1,300. It's lost half of its value in no time. So all of these things put together means that the Monetary Policy Committee has to meet and has to deliberate and go in a granular fashion to address the issues and address them so that the price of commodities begin to actually moderate and that people begin to have purchasing power. There are so many factors that are going on at the same time, including wages, including government spending and expenditure. I think these are critical issues.
Yeah, very critical issue. But another critical one is the area of energy. And I think it's about almost 2 weeks now. I don't think it's up to 2 weeks since Dangote Refineries started operation. Of course, we are all happy for that. And we are waiting with bated breath. But please help us to understand the process. I did see in the news some days ago where they said that there are two filling stations, petrol stations, that would, be purchasing their products, to get it out as retails and all of that. Paint the picture for us how long more we have to wait. I guess we are anxious.
No, let me correct one thing. The Dangote Refinery is commencing production in another week or so. The products will come out in the market. There's initial production and everything going into the tanks. But one thing is clear, that there's going to be adequate supply. I think last time we checked, about 33 million liters of diesel will be produced. There's also dual-purpose kerosene. And that the first thing is that there is a question of how is it going to be evacuated to the markets. It's going to be 70% of the evacuation is going to come by marine vessels and about 30% by trucks that are coming in through Ogun State, Ekpe, so it does not cause any disruption to the Lagos traffic. Lagos traffic is bad enough with the closure of the Third Mainland Bridge. So I think the Dangote Refinery, knowing very well that this is necessary, had made adequate arrangements to ensure that they don't compound the problems of Nigerians in terms of traffic in Lagos and the downtime to the economy. Secondly, it guarantees supply. And basically, with guaranteed supply, you will find that the prices will moderate. But prices are made up of cost plus the margin, right? So I don't think anybody should be fooled or get into the imagination that because the refinery is working now and the prices are going to crash, you cannot sell below your marginal cost. You produce your marginal cost equals your marginal revenue. And so that is one. But one thing is clear, that there will be guaranteed supply, and that it will also make sure that the supply goes across the country to various areas. I think also we should bear in mind that because diesel shortages and shocks lead to inflationary pressures, once you have guaranteed supply, it will help to moderate inflation and put the economy in a good stead. The total investment in the refinery is in excess of $23 billion. That is almost 25% of the gross fixed investment of this country. The group the Dangote group are paying, I think they are the second or highest corporate payers of corporate income tax in this country. So all of those things have to be put into consideration as a major milestone for Nigeria and the West African region. It's not just a Nigerian entity. This is the single largest refinery in the world, 650,000 barrels a day. So I think we have to take that into consideration. Now, having said that, we must understand that this is not a silver bullet that will solve our problems. It's a necessary condition to moving Nigeria closer to macroeconomic stability. And investors of this nature, like NNPC and others, should be encouraged to do more and not discouraged.
So what can we expect, say, by the end of this year? Now we have Dangote Refinery, the mechanical rehabilitation is done, at least the first phase. We have Dangote. We also hear news of, in states, encouragement of modular refineries. Can we expect that by the end of 2024, Nigeria or Nigerians will be energy sufficient and dependent or independent?
No, quite frankly, with the commissioning of the Dangote Refinery, when all products are coming out from the refinery, Nigeria will be self-sufficient and will have capacity to service the whole of Western and Central Africa. No question about that. So it's not the sufficiency of products; it is just the quantity and the quality that is produced. And right now, what we've been doing is that we export our oil through Trafigura, Glencore. They refine it for us and bring it back. It's a very opaque system, which is not open to transparency. Now, with this system we have, and when you have excess supply, one will say that, then you'll find that the prices begin to moderate and supply is guaranteed. The same thing happened in cement, mind you. There was a time when Nigeria was a major importer of cement. In fact, we had a cement armada in the 70s. But because of the activities of Dangote, Lafarge, and Boa, we now are net exporters of concrete, of cement and aggregates. So,
but it doesn't help the price, Mr. Rewane. That hasn't helped the price of cement.
Well, the price is a function of cost and supply and demand. So nobody thinks that there's nothing that says that once supply increases, right, and cost does not reduce, that prices will come down because people produce at where their marginal cost equals their marginal revenue. They will not produce at any point higher or lower than that. So but one thing is sure, that if you look at the price of a bag of cement now, maybe 5,000-6,000 naira, and look at it 5 years ago, and compare it with the inflationary trend in all other commodities, you find that cement has not moved as fast as it would like other commodities because of the guaranteed supply in the country. But there are other factors that go into cement production, the cost of energy, the furnaces and all of that. But the discussion today is about how can we use refined products to stabilize logistics in this country. Don't forget that people have to transport goods from markets from industry to markets and from markets across the region. So once we get the logistics right, which is one of the major factors that lead to inflation in this country, then inflation begins to moderate. If inflation moderates, your exchange rate begins to appreciate. And you can see that in the last 2 days, maybe based on false expectation, the exchange rate moderated a little bit. And I'm not sure that is sustainable at this point in time.
All right, Mr. Bismarck Rewane, Chief Executive Officer of Financial Derivatives Company, thank you so much for your time this morning.
Thank you for having me.